I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, stock market investors rested last week after a huge rebound the previous week, which saw the S&P 500 move up almost 10% from its intraday low made on May 20th. Investors did want to nail down some profits or take some losses on bounces and found reasons for caution, as the EU agreed to a partial ban on Russian oil. Then President Biden said he backs Powell's inflation fight, and that sent yields moving up pretty sharply. Of course, the president didn't blame Powell for the inflation, which we all know he should have, and of course, he didn't take any ownership for his policies and how it affected oil. In that regard, Jamie Dimon, that's the JPM CEO, said, "Brace yourself for a hurricane," talking about the aggressive actions of the Fed and what needs to happen. And then the Bank of America vice chair came out and warned that inflation must be reduced drastically. And he said, so the Fed must act to reduce growth in a very significant way. So, we talk about this all the time. First, the Fed raises inflation and makes everything so much more expensive for everybody, and then they take actions to reduce employment. So many people will lose their jobs at the same time that things are much more expensive. You got to wonder, is that the Fed's role? Well, that hit stocks very hard on Wednesday, and it was the biggest down day of the week so far. Here we are midday on Friday, though, and the S&Ps are down pretty good, so that's yet to be seen if Wednesday will be the worst day of the week. Thursday had a big reversal day as Microsoft, well, they cut their guidance, and they're blaming the strong dollar. And there are many international companies that are going to come out and say that. So Microsoft fell really hard. The S&P 500 on Thursday was down 25 points early, but then buyers came in, and there was a big reversal that got them to move up to a gain of plus 70 points on the S&Ps. And that was despite the Fed vice chair, Brainerd, coming out and saying that the next two meetings that there would be half-point increases. And this is the Fed now giving forward guidance like we have probably never seen before, where they're pretty much telling you what's going to happen in the next couple of meetings. And she also said it's hard to see that September would be a pause. And the market was hoping to hear that by that time the Fed would be pausing. But they want to go to an area that's levels of interest rates that are pretty restrictive. So there's a long time to go as far as that goes. But help came from Bank of America, which upgraded semiconductors, and those very beaten up stocks were able to get some rallies. So that helped that big gain that came on Thursday. Our analysis that we've shared before said in a rally you have to sell these semiconductors. And then on Friday here, there was a downgrade on Micron, and that stock is down 7%, and the semiconductors are moving lower again. The Friday here, the overnight market was very soft as Elon Musk came out and he said he has a super bad feeling on this economy. And now he's pausing hiring and he wants to cut his workforce by 10%. The employment numbers came out and they were on the strong side. which saw 390,000 new jobs created. And the market had kind of a little bounce on that because it was kind of in line on the upper end of the range. But then the sellers came in again with Tesla falling very hard now, as I speak, down close to 9% on the day. And the market went into sell mode and got down to about minus 75 points. And it's pretty close to that now at midday as I do this recording. If you believe that the stock market's huge rally, which was from March 2020 to January 2022, that 118-point gain, that was influenced by the Fed and by huge government spending, and it pushed it up to a record valuation to GDP of 200%. If you believe that was the Fed and the government that was responsible for that, well, craziness, then it's hard to make a bullish case right now, as those tailwinds now have had a 180-degree turn and are now headwinds, with the S&P having gained 9.4% from its lows. It's time to start to talk about risk rewards, or should I say negative risk rewards. Our analysis showed that there was this rebound coming, and now it's come, and it's in a big resistance area. And there is still a little more room that it could rally, and I'm going to show you that when I do the S&P analysis at the end of the show. But that upside progress is likely to be limited versus the amount of downside risk. And I think Musk, he's spot on. Like Jamie Dimon, he feels super bad on the economy because he has his finger on the pulse. We showed Tesla analysis last week, and if you didn't see that, it might have been 2 weeks ago, we talked about that it had broken down. And our projections were for it to move below 500. Best case I can make is a decline to about 600. Musk, he's, of course, thinking about the economy and what's going to happen, but, I think he's about to get run over by other cars, and there is a enormous amount of gorgeous electronic vehicles that are going to be coming out very soon, and I think that Tesla is about to get run over by that. So maybe he didn't say that at all, and he's thinking about economics, but our pattern suggests Tesla's going much lower. Those headwinds for the market, the Fed, they're just getting started. This is the first week of QT, believe it or not, and they have a long way to go. Though the stock market bounce came a week or two late than we expected, it did hit our upside targets. And we are reiterating this, and we will keep doing this on these rallies. This is a selling opportunity for investors. This is not 2020 and 2021, where every decline brought new highs. This is 2022. And that 180-degree turn that we talked about in those tailwinds becoming headwinds, well, that has much longer to go. Again, I ask the question, will you get hooked? For this week, stocks, the major indexes all fractionally lower. They were up, but then gave it up here on Friday. Bonds, the 30s, they lose 4 points, and the 10-year yields surged 21 basis points. That's a big move. And the Treasury market, we actually believe, in just a few days is going to make a short-term low. So we're looking for that for trade, and we don't think that interest rates are about to surge past that recent high. As a matter of fact, we think that they will begin to stall pretty soon. Gold market, we'll call the metals mixed. Gold has a small gain, silver has a small loss. And I think that next decline that we're looking for that takes you into mid-June, I think you buy it with both hands and both feet. And you want to know why? Well, you have to watch our Future Speak show on Wednesdays. RV is now presenting on that. He's now the host of Future Speak and does a fantastic job. We are overwhelmed with emails saying how well RV presents that analysis. You got to see it. That's Future Speak for level 2, 3, and 4 members. The dollar, small gains, and we think the risk is that it will be moving down again without being able to get a lot of movement. And again, in Future Speak, you'll be able to see that when you watch that. Oil market, very strong, $4 gains. All the momentum in our indicators is up in oil right now. And we told our members, if it gets through the resistance at 116, it's likely to pop right to 122. And I wouldn't be surprised to see 122 in the next week or two. Coming up, Arvi is going to give you a preview of a member video where he talks about swing trade setups, and I think you're going to find it very interesting, where he looks at FEZ, which is the European stocks. Katie, beautiful job here as she shows the analysis on Amgen. You're really going to like that, as she does great analysis talking about our cycle analysis, our low tracker that we have. And she gives a really great lesson. Both Arvi and Katie give great lessons on this analytical style in this show. Matt is going to review level 2 content. It is so loaded for such a low price. You have to watch that. And he will give you the list of things that you can get as a level 2 member, which is a screaming bargain. And he'll even be able to give you maybe some discounts that he'll mention. And I am going to give you analysis on the SPY, on the S&P 500. And there are 2 scenarios that I'm going to give you in the S&P 500. Well, 2 scenarios usually from an analyst are, it may go up or it may go down, but we don't like to speak out of 2 sides of our mouth. We just show you our agnostic way of analysis, and I'm going to show you a negative scenario and a very negative scenario. I think those are the 2 scenarios that are coming up for the stock market. Do remember to go to askSlim.com. Check around our site. You might want to become a free member if you're not interested yet in becoming a premium member. And at least you'll be notified about this show and other things that we do. On YouTube, please do subscribe to our channel. Click the notification bell so you know when we post videos. We put a ton of them up in the last week. And we're always teaching our style of analysis. Make sure you like this video. Give it a thumbs up. And on Twitter, follow us at askSlim. And write to Matt at askSlim.com for any questions you might have on our memberships, any information that you need about our education and analysis. Matt can help you with that. All right, this is short-term swing trade planning. Arvi is going to bring you fantastic analysis on our member video that came out during this last week, and we're sharing that analysis with you on one of the many symbols that he discussed in there. And this is about learning how to get use analysis that gives you a favorable entry and really understanding how to improve your risk rewards. Arvi's going to show you that right now.
So this is FEZ. This is the S&P Eurostoxx 50 ETF. This is in our focus list, which we update 2 to 3 times a week and post to the askSlim chart grid page for our level 4 members. Actually, every symbol that we have actually mentioned so far in this video is in our focus list, just as a heads up. So what's going on here is this is really acting beautifully. We formed a key minor low right here the week of, if I highlight this, 5-9. Turned up nicely on the upside. Now, what's going on here is that this dominant cycle is really indicating that we are likely more range bound here in the FEZ. It's reasonable in the short term to get up to this 78.6 around 41.40 or so, and that's because we're in the window of time where this minor cycle is in a rising phase with money flows still pushing in, and there has been really no strong downturn quite yet in this dominant cycle, as we have not broken this key weekly low here at 35.80. So this is really indicating more range here in the FEZ. Our next key dominant cycle low is due 9/26 to 10/31. If we shift over to the daily chart, you'll see what we're looking at here in FEZ. First thing I really want to do here is zoom out on this, because you'll see excellent clarity in the FEZ on this big dominant cycle. If you want to really look at this on your charts, let me get my pointer. You can see right here, this is a 52 bar cycle. So you can put that on your chart. beautiful money flow patterns in play in the FEZ. You can see this got close to actually breaking down right here, but did not. It did technically form a higher low, and then we've now turned up, and now we have a positive ribbon here in the FEZ. So what we're looking for is for just a modest little flag here, and then for this to turn back up on the upside. I mentioned on the weekly time frame, it's likely that we can rally up to that 4140 level. That does look reasonable here on the daily chart. If you look at the levels, these are all rising, but they come in from 38.96 to 38.21. If this gets below the minor 78.6 at 37.72, that would render this idea no longer valid in the FEZ, but a solid turn up and solid cycle action here based on our analysis.
Love it, Arby. Thanks again. Great analysis. All right, here's Katie. She is going to give you really a great lesson in cycle analysis. She's going to look at multiple time frame analysis in Amgen. Of course, most stocks are in pretty negative shape out there, and she's going to show you one that maybe is a little bit better with reference to our cycle low timing tracker, which really gives you a great indication of what stocks may be in a time frame where they're going to fall potentially hard for a last time, or that they're bottoming or have bottomed. So this is just great information. So take it, Katie.
Hi, I'm Katie with askSlim. If you've been following our videos, you may have seen one of our new tools for level 3 and 4 members. This is the Cycle Low Timing Tracker. We made an enhancement to it this past week, and I'm going to show you that in conjunction with an opportunity highlighted on here in Amgen. This is Thursday's Cycle Low Timing Tracker. It's updated every day. The enhancement that has been made is these red, yellow, and green squares next to the symbols, one for the intermediate term and one for the short term. Now these colors are pulled from another askSlim tool called the Slimulator Ranking System, and they represent a proprietary combination of market condition, momentum, and cycle phasing information that provides us with a general bullish, bearish, or neutral hypothesis. We can then take that hypothesis to the charts and look for trade opportunities. So just glancing at the screen, you can easily see that most of the symbols are showing either bearish or mixed. The only symbol that is showing up bullish, completely bullish, is Amgen. So now let's go and take a look at the weekly chart of Amgen. This is a 10-year weekly chart, and our analysis uses 3 general components: cycle analysis, momentum, and swing high, swing low analysis. Cycle analysis starts with identifying the major money flow patterns into and out of a symbol. So these cycle brackets on the bottom are a drawing tool that helps us identify those. Amgen's cycles are an average 27 bars in length, and these purple vertical lines show where the actual cycle low occurred. Now we use our proprietary reversal scout, this green and purple ribbon on the chart, to show momentum, green for positive and purple for negative momentum. And of course, swing high, swing low analysis identifies important support and resistance areas where a move may stall or turn around. So let's take a look at this most recent weekly cycle. We got a good up move after making this cycle low at the 127.2% fib extension level, and momentum turned positive. Then we had almost a mid-cycle dip here and bounced off the 61.8% fib. We got another good up move and tagged the prior cycle peak resistance before momentum turned negative, and we corrected down to the intermediate 50% fib level. So a couple of things to notice here relative to certain facets of cycle analysis. First, this cycle ended higher than where it began. We call that a positively configured cycle. Second, we spent almost the entire cycle rallying, peaking over here at the later part of the cycle, and then only correcting for 2 or 3 weeks. And we call that a right-hand translation because the cycle is peaking over here on the right-hand side. So when we have this combination of a right-hand translation and a positive configuration that only retraces to the 50% fib level, the probabilities favor being able to take out that prior cycle high. Now notice these blue vertical dashed lines. These show a period of a few weeks around the ideal cycle low when we expect a cycle to make its bottom and begin to turn back up. You can see that we have been in that timing window, made a key cycle low, moved up, and now also have positive momentum. So we're 4 weeks off the low and we've already tested that prior cycle peak, and now getting some retracement into this rising support zone. So let's take a look at the daily chart and see what this looks like. So here is that advance off the intermediate term low, a positively configured bullish cycle with a right-hand translation. And now we're approaching this period of time around the end of the daily cycle when we would expect Amgen to make a cycle low and then another move up. So that period of time is between June 6th to June 14th, and Amgen is behaving as expected. This support zone is from 246.25 down to about 239. So this is a long side opportunity in Amgen that is forming. We would expect at least a retest of that prior cycle high. And then if it gets through there, possibly up to the 61.8% extension at around 264. Please do come and visit our website at askSlim.com to learn more about the cycle low timing tracker that calls your attention to this type of opportunity, as well as all of our other tools and services.
Beautiful again, Katie. That was really fantastic. And I really hope that people that are watching for the first time really have learned the value of this style of analysis. Coming up, I'm going to give you my stock market analysis. But first, Matt's going to introduce you to our level 2 content. And this is amazing. Don't scroll forward. I know you're in a hurry to get over to other analysis, but you really got to see this. And if you don't, come back again and scroll backwards, and then you'll be able to see all of this amazing content. All right, Matt, show them.
Hello, fellow traders and fans of technical analysis. This is Matt with askSlim. At askSlim, we are pure technical analysts. We are bull-bear agnostic, and we let the charts do the talking. We utilize Slim's unique cycle analysis, which has been developed and continuously refined over the past 5 decades. We combine it with custom momentum studies and swing high, swing low techniques at multiple time frames. The askSlim method generates analysis that allows us as technicians to project in time, price, and direction. Over the next few weeks, we'll be highlighting each of our premium memberships. Last week, we covered level 1, and today I'm going to briefly discuss level 2. Okay, let's jump in and briefly discuss our level 2 technical analysis services, which are designed to support multiple trading styles, from scalping to swing trading in the next few hours, few days, or few weeks. Level 2 is a big upgrade from level 1, because with level 2, you get to see and hear through video and live chat and webinar events the practical application of the askSlim cycle and technical analysis methodology. Our chart work is meticulously done to help streamline your trade planning efforts. Here's a brief review of our level 2 services and content. Number 1, our stock index report intraday chart grid live stream. This daily service is a day trader's dream. It delivers key insights into primary intraday momentum, key support and resistance areas, and high probability acceleration zones for the S&P 500, NASDAQ 100, and Russell 2000. Next, our Future Speak video weekly review. We take a look at our weekly and daily chart cycle analysis of the S&P 500, the NASDAQ 100, Russell 2000, plus the VIX, energies, metals, currencies, bonds, foods, and crypto. That includes Bitcoin and Ethereum. Next, our SPX live chart stream. See a live broadcast of our suite of custom indicators at multiple time frames for the S&P 500 each trading day. This is designed to help you, at a glance, determine the likely directional bias, catch changes in momentum, monitor for extreme conditions, and learn how to identify high probability short-term trade-ups. We also feature in level 2 the askSlim live dedicated trade planning webinars and chart analysis office hours with askSlim analysts Matt and Arvi. Finally, the amazing askSlim video library, where we have 9 categories of videos with over 600 educational videos, new ones being added every week. In this brief segment, I'm going to highlight a couple of our most popular Level 2 services. The askSlim Stock Index Report, Intraday Grid live daily chart stream, which is right here, and our weekly FutureSpeak video review, which is right here on the dashboard as well. First, we're going to take a look at the askSlim SIR Intraday Grid, which is a day trader's dream. It is designed for short-term traders and delivers key insights into primary intraday momentum, key support and resistance areas, and highlights high probability acceleration zones for the S&P 500, the NASDAQ 100, and the Russell 2000. This proprietary askSlim day trading support service is delivered pre-market each trading session and is available for our Level 2 members and higher. As we all know, the purpose of technical analysis and technical tools are to help give us an edge, an indication of a higher probability, not a certainty, because there are none, of one outcome happening over another. That is exactly what this service is designed to do for intraday traders, to help bring us structure and confidence to your trading each day. This grid is made up of 2 halves. We have an upside half here, and then we have a downside over here. The upside is for identifying the anticipated resistance zones. That area is highlighted in light pink and also then in dark red. The downside is focused on identifying the anticipated support areas. Those are the areas in light green and then dark green. We have added in a custom momentum indicator. We call this our askSlim Reversal Scout, which is designed to help identify the likely intraday directional bias, which is the line right here, which is green when positive and then purple when negative, and it shifts depending on the intraday momentum condition. Finally, the grids feature the anticipated breakout and acceleration zones. These are the yellow shaded areas here, as you can see in the S&P 500. These are the areas where the expectation is, based on the analysis, that the index will fill 60 to 100% of the acceleration zone once it's triggered through the acceleration, either resistance or support line. Note, these odds are improved when the Reversal Scout is in the direction of the breakout or the breakdown. Finally, let's take a look at our FutureSpeak video. It's published 48 times a year, comes out on Wednesday. FutureSpeak is a fantastic way to learn about the unique askSlim technical analysis methodology. In this weekly video, you will see and hear Arvi, our lead cycle analyst, go through our custom weekly and daily chart analysis with short-term and intermediate outlooks on the S&P 500, NASDAQ 100, Russell 2000, on energies, precious metals, Forex, bonds, Bitcoin, and grains and softs. Even if you don't trade all these markets, it'll be worth your time to watch and listen to Arvi step through the askSlim technical methodology on all of these important markets. I hope this tour of Level 2 was helpful. Make sure to reach out to Matt at askSlim.com for special trial offers. We look forward to having you become part of the askSlim community. All the best and great trading.
Love it, Matt. Just unbelievable how much is packed into just that Level 2 content. Great stuff. All right, stock market analysis. We're going to look at SPY. Where does this rebound stop? And maybe it stopped already. We're going to look at the weekly cycle analysis in SPY, and I'm going to give you 2 scenarios, both negative. I think you're going to find this pretty compelling. Let's take a look here at the S&P 500. So I've shown this chart before. Actually, there's a ton of information on here, and if you're looking at this for the first time, you're going to say, holy cow, how can anybody make anything out of that mess? I've had people call our chart spaghetti, or that it's overkill of information. Actually, it's not. There's one price chart on here. There is a cycle analysis on that price chart, and on the bottom is our guides. And in addition to that, I'm showing you a map. And this is the only chart that I ever do show you the map, because I really want you to understand the waves of the market and how there is important information from them. So this is the SPY, the S&P 500 analysis. This is a 10-week chart, but I'm only going back over here to show you this, which takes you back a couple years into the beginning of 2021. And what we're looking at, of course, is cycle analysis. So on the bottom are the cycle brackets. These are simply guides. They show us the rhythm in the market. And what we do is look for alignments in these average lengths. The distance from a low to a low is called a cycle. So in other words, from the origination point to the next origination point is where a cycle is. So these are the minor cycles. Those are 9 weeks long. Every single chart has its own unique cycle rhythms. So don't try to put 927, and this is 27 right in here, on another chart because it won't fit. You really have to do the analysis and decide what the common energies are to that particular symbol. So you can see in here, here's your dominant cycle made up of the 3 minor cycles, 9 and 27. This is the map of it on the bottom. And you can see in here that this describes exactly what happened in this dominant harmonic family. It gave you 1, 2, and 3 minor cycles. They were being driven upward by upward momentum. This is the askSlim proprietary momentum indicator for the weekly. That is the reversal scout. Level 4 members get this for their charts on Thinkorswim. And that gives you the momentum conditions. It flattened out over here a little bit, but then got strong and then came down for this corrective period. These yellow ovals are areas where the declining cycles are in alignment. In other words, these are the declining phases. Now, you might say the market was going up while this was declining. Well, that's not the case. Essentially, the reality of the upward energy means that this is actually how the cycle resolved itself. It was a positive cycle. You can see that on this map as we look at what are envelopes that are used in the true cycle analysis by J.M. Hurst. He was kind of the godfather of this. So here's the next cycle. You can see in here that's the minor cycle. Then this went up, made a new high like it's supposed to. The higher highs, higher lows are an uptrend. And then it failed and got below where that low was. That was our warning. And that was this head or double top, however it was formed right in there. And then the next rally in here failed early, which it's supposed to because it broke down. And they all both declined right into this time frame right over here. And you could see where the bottom on the ideal was right over there. But they don't always bottom right on the ideal. So because this was negative right in here, the next cycle should fail. In other words, it should rally and not get to a new high and then decline and get below the previous low. It did that perfectly in this minor cycle. So back right out over here, May 2nd, May 9th, we were talking about a bottom right in there. And that would be the bottom of this minor cycle, but it would be affected by the next rally would be affected by the negative trend that we had in there and the negative momentum, as you can see here on the reversal scout. It would fail, as it didn't here, by getting up to these levels of resistance. So we talked about a rally. We said, you know, the bottom here was about 410, 411, probably getting up over here to 418, 419. Which it got up this week to about 417, with an outside chance that it gets up here to about 421. So 411.50, 418, 421, the period of false rally as it comes up to the resistance targets. It did that exactly. It did it, you know, a couple of weeks later than we thought, but that's well within any normal variances, and then it got up right over here. You are here on the map. Right there, you can see that. It's this rally right in here. And that rally probably is not over. In other words, if the market gets a pullback, where would it pull back to? Well, into some support level, somewhere right in here. So that's about 403 on the SPY. And with the market selling off right now and short-term patterns suggesting that it would, that maybe 403 is where it gets to the early part of next week, and then begins to move up again. So again, we're looking for this area of 418, 421 is a possibility still out over here, and it could hold up into this mid to late June period. before this next cycle begins to turn down. So this is this period of false rally. This is where it shows up on the map where we said you are here, and this is what we're projecting right there. So in other words, this minor cycle should fail. It should take out this low, but it doesn't have to. I'll show you another scenario in a moment. And there's your 20% bear right over there for the SPY. And then you get another rally and then another big decline. And right now we're projecting to about 350 on the SPY. That's the 50% major support, a major fib. And this is the cycle trough where we're projecting September, October, and potentially as low as 335. So this is the major fib extension where you see this blue area, 353 to 335. So that's actually what we're looking for when you see that. Now, what if this was a little bit stronger in here? And there are certainly people out there that think this is 2020 and 2021 again, and the market could surge up to new highs. I would give that about a 3% probability versus a 97% probability of a big decline. But this is what we think would be the normal, where it fails in the next few weeks and then moves down again. You can see those major resistances that are in there. And the intermediate resistances that are in these pink and red shaded areas, and the support, this minor support area is all right there. But now, if I want to look at a little more positive scenario, which is less negative for the near term, it looks like this, which says that the market actually could get a little bit higher, come down, hit supports, move up again, and that would take it out into August over here, where it goes into a period of some significant chop, but then you get into this area here where it's likely to get slammed again, and that doesn't change our projection much. This would be a 365, this would be 349, 350 right over there. If it was this scenario where the market goes into a range before it really gets sold again. Either way, it follows this map right over here, which is the highest probability, which means that getting through this area here for that big resistance at 443 is just a huge long shot for that to happen, and much more likely that this false rally does fail in those areas that we're talking about, and that it does begin to move down in a very significant way. So is it this a more positive, super negative scenario anyway, or this one where it just doesn't, it's not able to get any real rally going and then heads down to those areas? Wanted you to see both of those. One is very negative, as you can see, and one is negative. And just fails from a little higher level. You want to learn more about our style of analysis, go to askSlim.com and go to the workshop. Go to the main page and scroll to the workshop area. There's a tab there, and there's a free video there you can watch, and it tells you about all of the now 23 different modules that we have in that workshop. You will learn more in that workshop about analysis, charting and chart analysis, and this style than you ever could or ever anywhere in the world. I spent 2 years writing that, 6 months producing it, and it is absolutely golden. We have had hundreds and hundreds and hundreds of people that have invested in that, and it's really worth going to take a look at. And also remember, Matt earlier in this in the Market Week show, if you're watching just a clip of this, showed you what our level 2 membership includes. And you get all of our analysis on all 25 of the futures that we do analysis on by using the Futures Hub, and that's for level 3 and 4 members. So it's just fantastic with all of our analysis in there. So I want you to just think about all of that and how you can become a premium member at askSlim.com. That's my analysis. Bearish or very bearish, you can take your pick on that, and I hope that it was extremely informative to you. I want you please to go to our site and become a free member if you don't want to become a premium member, just so that we can send you information, and you'll be able to know when these shows come out. Do subscribe on YouTube. Click that notification bell, and you'll know when we put videos up there. And do give us a thumbs up, like this video. And watch our member videos in the playlist. There's some great information in there, and you'll get a taste for what we do. Our videos, we have over 600 in our library. It's just incredible. And on Twitter, follow us at askSlim. For any questions, write to Matt at askSlim.com. I want you to be so incredibly careful. It is so crazy out there. And we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been